And we are good.
All right. All right. Hello, everybody. It's been a long time.
Hi,
Just,
Jeff.
just one thing on the agenda, if I could just say, one of the things that I'd like to put on, not today, but the upcoming, an upcoming meeting, is we need to review our investment policy statement and investment plan. We're supposed to do that every year. And it's something I don't think, well, it was a work in progress for so much of the past few meetings, but we should probably do just a review. And if everyone could review that prior to the next meeting that we hold, just so it goes fairly smoothly. But I don't think there's much to change, but everybody should have a look at it, see if something they want to change. That's otherwise we can proceed with the agenda as it stands.
Sure.
The first is a new term of office, and I don't know if the other board members are aware, but our term expires mid-month, approximately mid-month here. And I guess, is it Craig or Thierry, do you want to sort of update us on what's going to happen here and what we should be expecting?
Well, I think, thanks, Jeff, but I think Tara is
Tara?
the lead on this.
Yeah.
Craig could probably give a little bit of.
Okay, my apologies, Tara.
No worries, no worries. Do you want to?
Stick to the.
I can just go right. Yeah.
Okay, right, go ahead.
Okay, so November 14th is the ending of this term of council. Obviously, we've just had an election, and the council-elect, the inaugural starts on November 16th, and our new term of begins on the 16th. So with all the committees, whatnot, it's basically a staff report is put forward with recommendations on how to move forward first, of what committees will be a part of that and whatnot. But with the investment board, I believe we are, staff is recommending to just move forward. I don't believe, I think Wendy was speaking to me that it was okay to recommend with what we have, because it is for this, in our terms of reference for this board, it is members can serve for 2 consecutive terms of council. So that's for 4 years. So two terms in the 4 years. So and that is hopefully going in December for that.
So sorry, I was going to jump in. Okay, if I just jump in.
Please.
Sorry, I was just going to add to that. I believe that the term it ends November 15th or until a subsequent board is appointed. Sorry. So okay. We have a bit more time there. So we were obviously we're hoping everyone's on board, interested in returning. We were kind of hoping that we would probably come in with because it is a new mayor, it's a new council, there'll be a bit of education on this. So we were actually proposing or wanting to propose to perhaps keeping the board on and maybe going to council either in when we do our year end kind of update on what we have done, which probably would reside more in like potentially early March. That may not be agreeable with the mayor if he has an interest on it, but in which case we can go sooner. But that was our intent, to kind of keep this board at least for one more kind of term for sure, and then hopefully get then council to approve it going forward. We will have to resell the whole prudent investment. We'll have to educate really and sell it to them, but I'm hopeful they'll be supportive of what we've been doing. So again, hopefully that it's still early days and we're still learning what the mayor's hopes and wishes and dreams are, but that at this point would be kind of, I think, what we hope to do from speaking with Thierry and Craig. And I'll leave it at that. So yeah, I don't think you guys necessarily have to tell us here if you have an interest or not. Perhaps we can deal with that offline or another time. But I think definitely continuity right now is important, especially the way the world is. So if we can keep continuing and then expect we'll continue with this crowd into the first quarter at least. And then we can deal with the board going forward after that, but I'll leave it at that, I guess, unless Thierry is that, sorry.
Is there anything that the current members need to do if they do want to continue their position on the board? Like, obviously tell you, but is there anything else in terms of updating our CVs or anything like that?
Once we have a little bit more information on exactly what the staff report and what recommendations with the committees and stuff, I think once we have a little bit more information on that, then I can provide that to all the members and how that process is going to go.
Okay.
Normally with other committees, the investment board is a little bit different than others with our advisory committees and whatnot. Those are usually done through advertisement. Once it is set what committees that this term wants to go with, and advertisement goes up and is advertised, and then people will send in their applications and whatnot. I know with the board it is different. With it has more staff recommendations, but you know, even giving your updated resumes and stuff like that is definitely an asset as well.
So I'll just remind everyone too, if the process was, we did advertise. It was the first time the board was done. It is different in the language in the act. It's while council still has to appoint the board members, it's the political removal are supposed to be sort of out of that selection process, although they do approve it. So if you remember last time, we did do sort of an interview process, and then we took a confidential staff report, which included a small bio of each of you in the appendix, and then council approved that. So we will be doing a similar report. So obviously we would need updated information, but you know, have it ready. But I think we got a little bit of time. But that's and again, you can decide your own interests, and we can gauge from there where what we need to do. Mm-hmm. So you can feel, you know, if the board member wants to reach out to, I guess Jeffrey's the board chair at this point. You have a chat with him, and then certainly we can go there. But I'm hoping we have a bit more time. I'd like to really
December. Yeah.
Well, I'm hoping we can actually pull it into March, but that.
Oh, you want to? Oh, okay. Sorry. Yeah. That part, yes. Usually it does. By the time we get all the committees together, it is March. By the time, like with orientation and postings and stuff like that, it is March.
Yeah. So I think, again, this one's a bit different than the other advisory boards. So it's just the importance of continuity in the world today. I think we want to keep that on, and we do have the board is still in place until subsequent board has been replaced. So I think we do have a bit of time on that, but we'll confirm.
Yeah.
Mm-hmm. And that's right in the terms of reference that they do continue until the other one is appointed. So,
anyone have any questions? No. Nope. I'm fine. Thanks for clarifying that. That's great.
Okay.
All right. Okay. We have a market update that I guess, Thierry, are you going to give us your report on the markets, or do you not want to talk
Yes.
Sorry, Craig.
Sorry, just a procedural question for Tara. Tara, I know this came in on Monday. It's not. Refresh my memory, I guess. So this isn't posted publicly. Will this be posted publicly, the report, or is that how we have handled it in the past? Or the numbers?
The
Q3 investment update.
I don't think we
did. Okay.
I don't think it was. No, I think it was. You had sent it around to the members. I think that's what it.
Right. Will we? Yeah. I mean, will we be posting it after, or? I
can if you want me to, or.
Okay. Thierry, you look like you're going to say something.
Like if it has confidential,
right,
trade stuff in it, then it doesn't have to.
Okay. All right. Gotcha. Thank you.
We were going to.
And I think most of what we're going to be discussing will probably be reflected in the minutes as well. So.
Okay. Thank you.
Yeah. Okay. Thank you. I guess as Craig was saying, especially in the world we live in, then the question is that what kind of world are we living in now? So after last COVID, it seems like we're going back to normal, but that path seems to be getting more difficult by the day. From I guess last year, inflation being transitory, now we're seeing inflation being entrenched, and central banks around the world trying to do something about it. And what does that look like is basically quantitative tightening. So we've seen, again, from major economies, Canada, US, in Europe, trying to increase their interest rate to tame inflation. So in Canada, since March, it's been the sixth interest rate increase. So even though the last one was kind of, I guess the market was expecting a 75 basis point increase, and then the bank delivered a much smaller 50 basis point. So bringing the policy rate at 3.75. Now, I guess the backdrop of all this that central banks are doing is being cognizant of the fact that the impact of this tightening, i.e. increasing rates, is somehow is more real, because the if you take Canada, for example, the high level of debt, especially household debt, kind of it'll be good for them to get to a point whereby they can engineer what is called a soft landing, i.e. bring inflation down without creating a deep recession. So we're still kind of in that process, but it definitely had an impact on market. So if we look at across the board, equities, fixed income, they've all suffered from what's been done. The impact of increase in interest rates. So what we've been doing with that is, like, if you look at fixed income, for example, our benchmark rate, kind of dropped by 6.8%, and we did a little bit better. But again, how did we do that is kind of moving our assets into shortening the duration of our assets. So on the equity market, similarly, S&P dropped about 24%. In Canada, we had a similar drop in rates. In performance. So I think Canadian market year to Q3 dropped about 11%. So we did a little bit better than the US. However, the US, from a Canadian perspective, kind of we had the currency increase about like 6-7%, which kind of helped give us a little bit of a boost in our performance from the US side of things. Overall, we're still in the process of implementing our plan, which is deploying funds into equities. So the way we've been doing it is kind of cautiously, taking our time, and without trying to time the market. But given that we're just starting, we're more opportunistic in the way we approached it. So we every time we had an opportunity to buy the dip, we did. And from our implementation perspective, I think last time when we talked about this, we said we were going to buy between 1 million to 2 or 2.5. So we've been kind of a little bit lower on that sense, in towards the lower end of the range. And again, we're just kind of being cognizant of the macro environment. Not that we're trying to time the market or call, but it is just being a little bit cautious. So now, even though I'd like to just give a little of context in terms of those performance goals, as people look at what's happening in the equity market, rightfully so, it's kind of worrisome. But even though right now we look at the year-to-date market on the performance, if you take a look at it from like a pre-COVID standpoint, you can still see that the S&P is still higher by 5% compared to the highs in February 2019. So that is to say that as we continue to deploy this, it is good to really put it in context and take the long-term view of things. So if you look at it just 1 year, you're like, oh wow, oh my gosh, it is really bad. But you take again 2-3 years into account, you see that, oh yes, there's a decline, but we're still higher than what it was pre-COVID. So I just want to stress that point, because again, in times of turmoil, it is there's a tendency to just kind of focus on the short term, right? But this, again, equity is a long-term investment. So even though it is tough, we still believe that it is on the long term, the upside potential is still good. And yeah, I think on the balance, so we still see, again, the from a commodity standpoint. So still, the US technically usually kind of the gold is kind of the safe haven when you have uncertainty in the market. But again, the US dollar seems to be safer, i.e., than commodity. Gold, copper, they're all kind of trailing. Oil has come down a little bit from where the highs were at the beginning of the year. If you look at it in terms of what are the higher risk, we still have the supply chain issues. This seems to be resolving, but I think still a challenge if you take into account what's happening in Ukraine. So again, we don't know how that's going to pan out going forward, and that's really also the labor market as well. So as central bank increasing rate, trying to kind of temper down demand, we're hoping to see labor market kind of cool down, which would bring down inflation, but that's still not the case. So it is difficult to kind of forecast what is going to happen. But I think from their viewpoint is, yes, rates have to go higher. They have to take into account the impact on household as far as Canada is concerned, I think globally as well. But how do you strike that balance? That's kind of the stance right now. And yeah, I think that's unless there's so much to talk about in regard to what is happening in the market right now, that it's hard to kind of. But again, if you're looking back, I think the main point has been inflation and the action of central banks to mitigate that. So it has not been very favorable for neither fixed income or equities. But from our perspective, it is good, like especially on the since we're mainly on cash, so we have the chance to really take advantage of increasing rates as well. So which really aided our performance. And with that, I'll let Jason talk to the specific return per funds, and then I'll jump in if there's any.
Thierry, can I just ask you a quick question about the investment program? Are you comfortable with the parameters that were set up in terms of how money is being regularly deployed into the various markets? My question is, do we need to have a look at that? Are you comfortable with sort of what has been set out in terms of putting money into the market, getting more the cash out, more active?
Yes, I'm comfortable. I think we have internally we have a little bit of room to kind of implement that plan. So yes, we've been, again, as I said, we've been cautious given the macro environment. However, we kept on pace. So for us, the main one was really the equity implementation, which initially last year I think we were kind of expecting to be fully allocated by year in 2022, which we probably not going to be able to meet. However, we're on track. So every month we still deploying money into equity.
Thanks. Yeah.
So Thierry, the target is 20% of portfolio in equities. Can you tell us roughly where you are at the moment?
At the moment, I think we are around 5%. So we
Yeah.
way off. I mean, we're not there yet. So it's to say so. I think we're on a very
So
long.
you've only done a quarter of what you wanted to do by year end.
That's correct. Yeah.
Right. All right. Well, I don't, the way the market is right now, I would say, like where we are right now, I would say it's 50-50 whether you're going to be up or down in 2 years or flat. A year ago, it was, I wouldn't have said it was 50-50. So I would just, I would just keep on with the plan, and maybe be a bit more regular than you have been. Because I mean, rates can go higher and markets can go down, but the fact that rates are going to go up again is not going to be a surprise to anybody, or shouldn't be. The only surprise will be if they slow rates. I mean, there's plenty of people talking about 4.5% or 5% is the ultimate target. So unless we either go well above that, which is certainly a possibility, which would be a negative surprise, or we don't get there, or we get there more and more slowly, I think you need to be a little more regular in getting into the market. I mean, to have only done a quarter of what you started to do, I'm a bit surprised. I wouldn't have quibbled if you were halfway there, but especially now that we have had these rate shocks, I think you need to be a little more regular in your actions. I don't know what anybody else thinks, but that's my 2 cents.
I agree in terms of I'm looking at the chart. I think Jason's probably going to get to it, but in terms of, I guess those yellow dots are where stuff was at bought. Is that right? On
That is
that
correct.
chart?
Yes.
I mean, if anything, still lots of money to put to work. We should be happy that the market's where it is in terms of low, and continue to put money to work here and hope it goes a little lower as you go along. Even, I mean, that's not what everybody wants, but for us, that works out well. So when I look back at my notes from our last meeting, I think we all talked about what was going to happen fairly accurately, but I think the how it feels is not, as orderly as we had hoped. And you talked about a lot of uncertainty going forward, Thierry, and that I agree with that. So yeah, I think we got to continue to keep putting that money to work. And someone could refresh my memory. What was, like, if we're doing 1.1 million a month in 2022, what was the range we talked about, or what was the target per month? I don't have my notes in front of me.
I believe it was 1 to 2 million a month.
Okay.
Yeah. I just want to add to Thierry's point there as well too. So we're close to 5%, but the other thing that's going on too is that the capital base isn't stagnant. So as more money trickles in to manage, that has been dilutive to the percentage allocation to equities. So I think if we go back and look at the beginning of the year, I think you would see, based on what we hold now, that's actually closer to about 7 or 8%.
Oh, I see. Okay.
Yeah.
Okay. Nonetheless,
I get it.
No. And again, Gordon, I think you mentioned this during your last meeting. That I think that's a point that you brought up at the time as well, and we definitely take into consideration. And then our hope is really to ramp it up. So
okay.
We'll.
Yeah, and as I said, at the start of the year, or even in early part of this year, I would have been more hesitant to say, you got to get at it. But I would say we're the markets are down, but like valuation wise, they're sort of in a basically a mid-range. So, you know, as I said earlier, it's basically a 50-50 bet whether you go higher or lower.
And to reiterate your point, I mean, we have more money behind that, so we're actually hoping the market goes lower, right?
Yeah.
Yeah.
I think one thing that is starting to help a little bit in terms of the outlook is just the markets are getting used to what the central banks are doing. And as long as there are no surprises, you know, out of left field or right, whatever you want to say, I think the markets, to Gord's point, are just going to kind of muddle along. But if we do get a shock in terms of either an inflation number or one of the central banks decides it's going to really crush inflation, that is not expected in the market, and that could be, again, provide a buying opportunity if that transpires. But right now, I mean, the Fed raised 75 basis points today. The market's going up. It's going, okay, well, we expected that, so that's great. No problem. So, but you know, if they'd done a full percentage, I think you'd be seeing different numbers on the stock market right now. So.
Yeah, it seems like they kind of alluded to slowing down going forward. So looks like the market's pricing 50 for December and 25 early in the new year now. So kind of like the Bank of Canada did, right? Slowed down from 75 to 50. So I think the market viewing that as a positive.
The S&P was up like over 10% this last month. So, you know, it's not waiting around for you.
Mm-hmm. Yeah.
But, you know, to Jeff's point, it could have been down 3% if it was a different number today. So, I mean, it's tough. So you just got to stay with the program.
Okay, Jason, I think we've interrupted you enough. Do you want to go ahead?
I mean, the discussion is good. If you guys want to keep going, and we can jump in. So yeah, basically, so I want to start off, just walk you through that 2-pager I would have sent out prior to the meeting, looking at the performance by fund. So starting with the operating fund, you know, so on average, there's been a beat of 18 basis points per quarter. And that's largely been driven by the nearly 350 50 basis point increase in the prime rate since March. Year to date, and when I say year to date, this is as of the 3rd week of October. The operating fund is 1.78% versus the 90-day T-bills, which is about 82 basis points better than the benchmark. And in total, we have about 160 million in the operating fund, basically split between cash, high interest savings, GICs with a maturity less than 1 year, and short-term bonds. In terms of the capital fund, that's also beating by 1.72% per quarter. And year to date, we're negative 1.3%, but compared to the benchmark, that's almost 670 basis points better. That outperformance has been driven by the fact that we've had higher coupon paying bonds versus the index, a much lower duration versus the index, and recent buys. We've had recent buys, about 100 million with yields exceeding 4%. And in total right now, we're sitting at about 270 million in that fund, which represents about 60% of the total portfolio. The growth fund, as we were just talking about there, so it's just under 15 million allocated so far, which works out to just under 5% in total assets. The return year to date has been negative 13.6% versus negative 14% of the benchmark. Performance mostly in line with a 4 basis point on average beat per quarter. And again, that's mostly driven by a slight overweight to financials on the Canadian equities. You know, because we're doing the TSX 60. So basically we have a large cap bias, higher quality, higher dividend pairs versus the TSX composite. And for the most part, I think you'll see on the last slide, we're mostly in line on the US equities by sector. Overall, the year-to-date total return has been 2.2 million on a weighted average balance of 352 million. Sorry, I just lost where I was there. Right, so yeah, then we're relatively flat year to date in percentage terms. It's about 0.12% positive, which represent a 700 basis point beat overall on a blended portfolio benchmark. When we exclude Electra from that, we are actually negative 0.17%. So it's still a beat of 678 basis points versus the benchmark. Turning to the allocation.
And Jason, if I may, so that when we referring to Electra on that point is the note, not the Electra.
Yeah, the Electra
equity,
note.
Just
Yeah.
the note.
Yeah.
Mhm.
So that note's 20 million right now, which is roughly 9% of the capital fund. So overall, it's a pretty small stake in there now. So I just want to give you a bit of a breakdown by fund level, what we're doing on each one. So turning to the operating fund, roughly 2/3 of that fund is in cash between just bank deposits, high interest savings. And the other third of that is in marketable securities like short-term bonds. There are some GICs as well. On average, there's a yield of 3.48% and an average term of less than 90 days. We have been taking advantage of the higher rates in GICs. And recently, as I mentioned before, we've added I think about 30 million recently, above 5%. So it's been a considerable bump there. We do have a couple of large maturities coming up towards the end of this year as well, which we anticipate will drive that yield even higher. Turning to the capital fund, I mentioned before, so the average yield right now is 3.74 versus the benchmark, which has an average yield of 4.14. The average coupon 1.56 versus 2.29 on the benchmark. That is being diluted by the fact that we do have GICs in there. If you were to remove those, it's almost 4%. Quality wise, we're AA on average. Duration wise, we're a bit short, 2.1 versus 4.22 on the benchmark. The larger allocation to GICs has offered us a better risk return, lower price risk, and a better yield pickup on the front end. So we've been able to improve by 10 to 25 basis points just on those. I spoke about Electra already. I'll just skip ahead here. Are there any questions so far on any of the anything that you've seen so far on the capital fund or the operating fund?
The growth in assets for the funds, all three of them combined, has been incredibly, you've doubled basically.
Yeah.
Is that to be expected more going forward, or like it makes Theory's job that much, your job, Jason, too, that much tougher, just like trying to get money out there. And I'm quite surprised actually at the size of the assets. But
Yeah,
is that gonna-
I'll
is that
jump
gonna
in on
continue?
that one. So
Okay.
Thierry and Jason, jump in if I'm wrong. But I suspect that's probably a lot driven by this year development charges. So we've as you know, like the city's investing a lot to grow, and if you've been around Barrie, there's a lot of activity. So we've had expected increase. I would, it's being positive, and then I would say the other side of that is some of the capital forecasts are being, I'll say, more realistic, and they've pushed out some dollars. So the ins are what we expected, and the outs are less anticipated. So that's the main driver. Is it going to continue? That's hopefully the answer is yes. With the economy, and is it going to impact construction? That's a big question around here. I know when the city recently went through our credit rating exercise with Standard & Poor's, and they were questioning that a lot. But hopefully it will continue. It is expected to. The city's supposed to be growing by I think it's quite a few number of units. I think we are hoping for around 1,200 units a year. I think the very aggressive plan was 2,500 units, which I don't think will ever happen. But it should continue, Jeffrey. It's just it might slow down a bit. There has been. I expect this quarter will be a bump with the construction index coming in at 15%. So we index our DCs and they go up January 1st. I suspect we'll see hopefully a bit of a bump in the next few months, and then we'll see what happens next year. So it's a long-winded question. I think we're hoping it continues, but there will be a point where that money's flowing out. As I say, the engineering groups are smooth their numbers a bit, but there is still a lot of capital works that will happen. But it is a big jump when you look last year and even the year before that. So it's positive from that perspective.
Yeah, I think it's about 100 million. I think that we are more than we thought we would be by this point. So it has had some impacts on, just looking at the equity side that we were talking about earlier, it has diluted, the share of equities. So going to the growth fund now, I think we kind of already touched on most of this, so I'll just skip through what I have here quickly. So right now we do have a 60-40 bias to the US on the equity portfolio versus the benchmark, which is 50-50. We've added so far for 2022 11 million. And we've been buying the dips for dollar cost averaging. You'll see a chart in the handout that you have there, basically showing the S&P 500, the yellow dots, basically are the days that we were buying. You will find on the same days we were also buying Canadian, so you'll notice that's just the S&P 500. The other part is, I mentioned the Canadian equities are slightly overweight financials, just by nature of the ETF that we're using, which is, I think it's an overweight of like 4%, I believe. And we're underweight real estate, materials, utilities, just by how that index is constituted. And in terms of the US, so we're pretty flat on a sector basis with the S&P 500. And that's kind of concluding the comments I had. If anyone has any questions.
What's the rationale for overweighting the US versus Canada?
I would say it's no, just one is we do have a small bias towards the US, but again, especially on the I don't want to call it a bet, but just taking into account the potential windfall from the currency, and but it is also functional because since we still in flux in terms of implementation. So as you kind of rebalance, you see those volatilities in terms of the weight. But our goal is to bring it back to, by the time we're I would say to bring it back to closer to the 50-50.
Okay, thanks.
Yeah.
I just had a question on the holdings in the equity portfolios. I see one portfolio has 4 and the other one has 11. Can you just expand on what those are? Are we using sector ETFs or?
Yeah, so on the US, yeah, we're using the sector ETFs. On the Canadian, we do have, we are using one ETF, but then there are a few single stock positions in there that, you know, that they're relatively small, but they were.
Okay, so it's one main ETF and then 3 individual stocks. Okay.
Yeah.
Just one thing on the growth fund benchmark. You're using the TSX, the broad index of the TSX, but you're investing in an ETF that's the TSX 60. Is that benchmark suitable for what you're doing? Using the broader index rather than the 60 index?
Well, I guess that is we could have picked the broader index, but I guess that was based on the IPS, the benchmark being the composite. But we just felt like there was the TSX 60 was a better vehicle at this point for us. So,
okay, but you're comfortable with the benchmark being the broader index?
Yes, we are.
Okay. Okay.
Any other questions?
Yeah. All right. Well, I like the relative performance overall. It seems like guys are doing the best you can with the tools you got, right? So it's a difficult market. I just had one question about your GIC holdings. Now, they have a rating of A, I see. Is that the rating of the financial institution that is issued the GIC?
So how do we answer this, Terry? So,
yes.
On average, yes, it is single A. There are banks in there as well, and there's also
I would say the answer is yes, because they're not individually rated, right? So the security themselves are not rated. So
right.
We translated the institution's rating into those security.
Okay. And you have 18 positions in the capital fund, so that's 2/3 of the fund. I just I'm comfortable with the A rating. I just you realize that there's only a certain limit on what's insured there for each institution. So, but I'm sure you're doing your due diligence there on that. But just wanted a little more clarity on that. So, any other questions from any of the other members? Okay. All right, Tara, I think we're just about done for the day. So is there any other business we should be discussing here?
I don't believe so.
Do you want to? Do we want to talk about a next meeting date? Are we?
Yep.
Do we want to meet sooner, or are we comfortable meeting? I guess our year ends December 31st. Yeah, I mean, do you want to meet? I looked at Jason and Thierry in terms of when we've actually done our year end stuff, but I know we were hoping to kind of. I think Thierry and I were thinking maybe March, but maybe we need to meet sooner sooner. So I'd just open up the floor to what do you think would be appropriate for our next meeting?
When does the annual review have to be done?
There's no set date. We generally do it in March, April, only because we do our accounting year end, and by the time we get that finished. So, I mean, it would be good. The challenge is in terms of going to council, you're limited kind of on what you can bring forward. So a lot of their focus is going to be in January. We're presenting the budget mid-January with the approval date mid-February. So there's going to be a lot of activity on council talking about issues like that. So we generally avoid that timeline. Usually we do it in December, but with the election. So to introduce the concept of prudent investment and all that might be a little bit too much for them at that time. So if we're going to report something, I'd probably say it'd be early March at this point.
I wasn't sure we're speaking of the same thing. I'm talking about this committee's review of the investment plan, which Jeffrey mentioned at the beginning of the meeting.
Yeah.
Are we talking about the same thing? Because do we have to take that to council, or just requirement that this committee reviews that?
The way I read it, we're just supposed to do it ourselves. Is that correct, Greg? Yeah.
Yes, that's correct. I mean, if the board makes a recommendation where we want to change it, we would do that with a report to council. But it's right now it's on the board's hands.
Yeah.
So we should probably do that before March, like sneak that one, have a meeting just around that, confirm it or whatever. And then,
just in terms of theory, Jason, when can you have the Q4 report ready? Because I think that's something we should review probably sooner rather than later. But you're going to be busy with various things. But what's a realistic time frame in terms of having a Q4 completed so we get the full year for 2022?
So I think we picked so in order to get all the numbers externally audited, so we're looking at probably end of January just to have a statement from the custodian. But then again, there's the internal accounting piece to just make sure that there's nothing that is missed. So realistically, we can have the numbers, we can have the report ready, I would say probably February, mid-February. So at that time, we could also meet and just kind of discuss or again, depending on if there's any changes, because we ideally would like to have those changes incorporated in the actual report going to council. So if we are coming back with the report, then we would have the numbers, i.e. the report pretty much ready to be blessed by the board before going to council. So there may be a need to have a meeting before that to have to look at the IPS, in which case if there are any changes, we just kind of incorporate and then present the final document to you guys.
So do we want to set something for sometime in February?
Yeah, I was just going to jump on that. That probably would work well if we did something around mid-February, then or even a little mid-February. It'd be a nice beginning of the second week or something, and then that way we could discuss the report because we'll probably be on the agenda in early March to bring forward. So that'd be good timing, I think, for us. But if you wanted to discuss the portfolio sooner, we can do that as well. But I think definitely February, mid-February.
The first week in February is the 1st on the Wednesday. And the second one is the 8th. Second week in February is the 8th, on the Wednesday.
Probably from a numbers, it might be better if it's the 8th.
8th.
Yeah.
And our meetings are now on Wednesdays, I think, at that time too, for council in general. So I don't know if this is gonna.
Yeah.
Tara, I think now I don't know if we're still going to finance and corporate services, right?
That's another part. I'm not.
I would assume yet.
So. I just don't know what reference committees we're gonna have yet. So that's one of the reports that will be going shortly. So.
Assume for now, Thierry, but more to come with the new mayor when he decide what he wants.
Okay. Well, the 8th is fine with me if you want to set that as a sort of.
I can tentatively book it, and then at least it's sitting there for us.
Okay. Okay.
Jason, that's enough time for numbers to be finalized.
Yeah, we usually get final numbers by like the third week of January. So, giving ourselves, some time to put everything together.
Yeah.
First week of February should be okay.
Okay. All right. Yeah.
We are also able to meet in person now too. I don't know if that's an option for any of you, but it is.
I remember.
Both options hybrid.
Sorry, Tara, I'm laughing because I just remember when we first met long before COVID. I remember one of you guys' first question was, "Can we meet remotely?" I remember saying, "Nope, not in there. This is a municipal government. We don't do that." And here we are.
That's why we're hybrid, but yeah. There's always that option.
Yeah, thank you for letting them. I'll let the board members can decide if they what works for them.
Easy for me, but whatever everyone decides is fine.
Yeah.
If there's an in-person meeting, I'll be there.
Yeah, same here if there is, because I'm fairly close. So.
Okay. So I will send a meeting out. Meeting invited for that. Okay.
Very good. To the other board members, if you want to just reach out to me separately and just indicate your willingness to go forward as a board member, and I'll pass that along to Tara and to Craig and Terry. So we don't need to do that online, I don't think. So.
No, it's best. Yeah,
That'd be great.
Yeah,
go there.
Great.
That'd be great. Thank you very much.
Okay. All right. Well, I think then we should be adjourning the meeting.
I hope your elbow feels better. And,
yeah. I'm hoping to get a lot more.
Okay, we'll see a tie. We'll see a tie next time.
Well, Jeff, I didn't see the gavel. Is that can you still?
I can't hold it. No. I do have it somewhere. Anyway, it's been a pleasure seeing everybody again. And talking about it. Good job, guys, what you're doing. I think, as they say, you're making the best with the tools you got. So anyway, all right. Take care, everyone.
Thank you.
All right.
Thank you.
See you in February. All right. Bye now.
Hmm.